The Chief Investment Strategist at Money Map Press, Keith Fitzgerald. Thank you both for joining us tonight.
Thank you.
You're welcome.
Keith, so let's start with you. Is it as simple? Apple dragged the market down today. Is it as simple as when Apple goes, the FANG stocks go, the market goes, and sort of here we are?
Yes and no. I mean, Apple is a very widely held, very liquid stock, and it's part of a lot of the computerized selling. So you have almost a self-fulfilling tumble once it starts. Computers hit a key level, more selling comes on, people walk away from the bid, and next thing you know, you got the avalanche down. Again, it's a big stock, it's widely held. In sentiment, people trying to get ahead of something, they're imagining two of those things, that's a witch's brew.
Lee, are they trying to get ahead of, we got the holiday season around the corner. Is this kind of indicative of what we might see from Apple and from that sector going forward, or is this just kind of a one-off, not necessarily? Can you read more into it?
Hey, listen, I can read all I need. You know, last earnings season, back in August, I came on Fox Business and I said, hey, this is only about iPhone sales. And if iPhone sales slip, I don't care what cloud service or what other piece of revenue you have, that's all. So when they pulled this don't ask, don't tell on iPhone sales, let's just discuss our profit margins. To me, it was the end of the deal. So I think all that's happening is we're seeing bearish sentiment. We had 7 of the last 8 Fridays closed down. And so I'm just a contrarian. I want to do the opposite of that. Last week we saw the 10-year Treasury actually rally in the face of unexpected inflation from the PPI numbers. So this is crazy. So I think you have to be bullish. I think you have to be a contrarian. And I think you have to buy this weakness. Tech has a problem because of their valuations. But none of the other earnings are really horrible. Only the valuations are horrible right now.
What about the dollar? Hit a 17-month high today, Keith. That brought, in part, Goldman Sachs down, worry about multinational corporations, how that can be affected overseas. Any worries there?
Well, again, you know, 40-something% of the S&P earnings come from overseas. So the fear is that somehow these earnings are going to be impacted and that's really going to slow things down. But again, this is a lot of people trying to get ahead of something that might happen. Every CFO worth his or her salt has got reserves built up. They've already figured this stuff out. They've got a sales channel that is working actively on this problem already. So I'm not especially concerned. I do think you have the opportunity to buy the right companies, especially now that they're being put on sale.
Come into my arena for a second, because this was the tweet that President Trump sent out today. This was at 10:34 this morning. I think the Dow was like down 200, 250 at that point. He said, quote, "The prospect of presidential harassment by the Dems is causing the stock market big headaches." That might be a little bit out there today. No, Lee, or not necessarily? Or do you think the market's spooked?
Just because Trump said it doesn't mean it's not real. I think, you know, I'm not a big fan of his. I think he's spot on right now. Listen, we've been talking about the 2 I's, infrastructure and impeachment. Let me tell you, the deficit is not going to get any better. So at least if we can get infrastructure spending versus spending 2 years trying to impeach the president, all this nonsense, I think that does weigh on markets short term. Is it going to weigh longer term? No. The dollar's a problem. But I'll tell you, there's other problems like housing numbers aren't great. But we still have so much good here. I don't think the dollar can kill this story. But yeah, I mean, put it this way.
We have to leave it there. I was just going to say the interesting thing, the real estate sector was up today when you talk about the dollar and housing, et cetera.
Bingo.
Keith and Lee, we got to leave it right there. Thank you both for staying with us tonight. Appreciate it.